Today in the crypto space, we see the market holding steady with Bitcoin showing a little bit of strength right around $114,000. Ethereum right about 4,400, doing pretty good because it's getting a bounce of 2%. While the rest of the crypto space, the altcoins are a mix of green and red. We do have some good gainers, IMX, MNT for example, and a few dips. Of course, MYX, after a huge rally, it deserves a bit of a dip. In today's video, I want to talk about the general market. I want to use Bitcoin as a leading indicator. But more importantly, guys, I want to talk about a project that many are looking at in the DeFi narrative, and that project is called AERODROME. So you know what? Let's talk about the news, let's analyze the charts, and let's strategize to capitalize. Welcome to the channel. My name is Mike, and let's get right into it, guys. If you're new to the channel, welcome. On the channel, we talk about cryptocurrency, Bitcoin, Ethereum, and all the altcoins. Looking for opportunity, whether we go up or down, bearish or bullish, it doesn't matter. All we want to do is stay one step ahead of the market so that we can capitalize on any of the volatility. And if you appreciate the strategy, subscribe to the channel, click the bell so you don't miss out on any of my future videos, including the live streams at 8 p.m. EST, where we talk about crypto news and price action. Guys, if you have any projects you want me to cover on the channel, feel free to let me know in the comment section below. You can hit me up on the socials. The links are in the description. Better yet, guys, join the Discord. The Discord is where it's at. Lots of good alpha, trade setups, fundamentals, and learning material. The best part is it's absolutely free. All right, guys, let's begin. Let's see what's going on here with the market. The question is, do we continue with the green? Now, tomorrow, it's leading up into the weekend. Tomorrow's Friday, obviously, and then we start looking into, weekend price action and all of that. And do we prepare our positions for that type of scenario? Obviously, the weekend volatility could be a little bit hectic, right? So we'll consider it tomorrow. Obviously, we have a little bit more to go here before we can get into weekend mentality. But at the current moment, we see Bitcoin showing a bit of strength, slow grind to the upside. Ethereum got a nice little bounce today, which is very, very nice. Hovering around that horizontal level for so long and getting a few higher highs on lower time frames is pretty nice to see, as you can see, right? And we see XRP showing a little bit of strength, BNB, Solana. The altcoins are doing pretty good. We're not going parabolic. I understand. So we're not, throwing fireworks at the current moment, but there are some good gains, 2 to 3% throughout the market, as you can see. The bigger thing is that, as you know, I've been focusing on structure in the last little while, because when we start to see price action go sideways or not go into very strong trending price action, what we really are doing is printing data. What we're doing is building a structure. And as of yet, we've been seeing some great gainers based on structural performance, right? Breakouts and, volume back breakouts, obviously something that we love to see, for the most part. What we want to see is it to the upside, obviously. And we're seeing some good gainers, right? AVAX did very well in the last little while for portfolios. That's great. And what else do we got here? We got many good ones. MNT looking amazing, 9.2%. But again, guys, it's been too good to be true for the last little bit for a lot of these. Like 40% to the upside in 7 days is crazy, right? It's a lot. Great gains. Congratulations. But would I be getting into fresh longs right now on this? Absolutely not. Absolutely not, guys. It's kind of moved up. Now, it could be that if you wait for a retracement, you might still buy at a higher level. It's very possible, but at least you're buying into a position of strength rather than buying into a pump that could get rejected right now as we speak, right? It's very risky to get in on moves like this because you don't know where the reversal is going to come in. But when you're buying into a dip, into a discount, at least you have a higher probability that you're not becoming exit liquidity, which is very, very important, obviously, for your portfolio, for your trades, and mostly for your sentiment. You don't want to know that you're being treated as exit liquidity. That's not a good thing, right? So ultimately, guys, the rule number one for me for trading is never buy the pumps. You wait for the retracements and look for those fat rounded bottoms. As we can see, grinding still. We have New York Protocol, BitTensor, many projects still grinding. WLD is rolling over here. Not a good look. Yes, it did pump. We know that 90%. Guys, how can we not see that? And a 10% dip is totally acceptable. That's reality. When you see a project pump significantly, we leave lots of imbalance and lots of individuals with profit that want to take it off the table, and you can't blame them for that. So it's not that, there's anything concerning here other than normal distribution, okay, and follow through to the downside here. So let's see where the sell pressure takes us, and maybe if you missed out on the buying opportunity of the past, maybe you'll get another opportunity to buy, hopefully at a discount. Okay, so that's what we're looking for. Lots of good gainers, continuation, as you can see. Even Caspa is doing pretty good. Nice melting upwards. It needs to really change some direction though. Cosmos, we got, what else do we got? Algorand doing okay, structurally, of course. Say still on a tear, doing its thing, slow and steady grind to the upside. Even KuCoin exchange tokens. You guys know I follow exchange tokens significantly, right? Because they give you a true indication of market participation. Are people getting involved on exchanges and so on? And if that's the case, maybe we get in signs of adoption and retail and all kinds of other good indications. So I definitely keep an eye on them. And as we continue, we see a continuation of green, a little bit of sideways, nothing major, but still pretty good day of stability and a bit of green here and there. All right, guys, so not too bad. All right, guys, so today I'm going to talk about AERODROME, because you know that I've been talking about AERODROME for a good while, for many reasons. Number one, I'm bullish on DeFi, because usually it is the case that it usually catches the runs first in the cycles, when we see altcoin season, and we start to see ecosystems do very well, and capital flow, and all that, we start to see the interest in getting into the DeFi space, whether it be the DEX or any other DeFi offerings that an L1 has within its ecosystem. The thing is that, because AERODROME is a part of the base ecosystem, and it's the DEX for base, AeroDrome is one of the few ways that you can actually get exposure to the base ecosystem. As far as, if you're bullish on base, what are you going to buy if they don't have a coin? And they do not. So at this current moment, the only way you can really leverage base's bullishness, if you're bullish on base, of course, is to buy AeroDrome and a few others, right? There's not many out there. AeroDrome being the main, uh, opportunity here from a DeFi and a DEX perspective, the main DEX for base. If you look at it, $1 billion market cap, fully diluted is $2 billion, which means that we have a bit of work to do to see, a few tokens enter in circulation. So that's something that we have to understand. There could be unlocks and rewards and unlock and things that are going to and distribution that is going to cause a bit of sell pressure. And there is a max supply, so there has to be some sort of burning mechanism to control the supply. And obviously, guys, this is definitely a deep dive quality. We need to do deep dive. Do your research, guys, so you can figure out the tokenomics, exactly how the tokenomics and what kind of mechanisms are involved in the tokenomics. Because as you can see, there's still risk of dilution here over time. Even though we're bullish on base and we're bullish on DeFi and so on and so forth, it doesn't matter. You got to be well rounded and understand the numbers ultimately. Okay, so pretty good there. Let's see what they're up to here on their X account. AERODROME, you can see the central trading and liquidity marketplace on base. AERODROME Finance, they got a Discord here, Medium, and so on. Pretty good stuff. 112,000 followers, which is nice to see. A bit of a community. And what do they have posted since June 12th, guys? That's pretty old. What did they have nothing new to say since June 12th? We will be integrating DEXs from Base directly into the main Coinbase app, enabling Coinbase users to access and trade millions of assets on chain. Okay, so that's good because you reduce that friction, right? You can get it on and off from DEX to centralized exchange and back and forth, which is good. That you don't want that friction. You want it simple. You want it easy. You want the retail investor to feel very comfortable to get involved, especially into these blockchain solutions that are not traditional, right? Because you don't want friction ultimately. We got a little bit here, a little bit more here. Epoch 106 saw AERODROME debut its community launch model, capturing this AVNT leading the way with 100 million in volume. That's pretty good. We saw AVNT do pretty good in the last little while. 2 days, tons based commission, so it's definitely being profitable there, which is good. Let's see what else they got. Contributors: Wagme Alexander sits down with Seed Club HQ to discuss the latest on AERODROME. That's pretty good. If you want to know what they're up to, they got a bit of, something there to watch. And I don't see much else. AERODROME is now eligible for receiving AERO emissions. Okay. I would have loved to see a little bit more, spark here, something really bullish, obviously after, posting, having these post community launch. Let's see what else they got here. They're talking on AERODROME, but voting for pool. Okay. Yeah, it looks pretty, routine. And that's the thing. We need a catalyst thing. We need something strong. Okay, guys, it's not bad. Let's take a look at the price action. I know you're here to talk about price action, so let's begin. Let's see what's going on with the chart. Aerodrome, ultimately, guys, has been an uptrend at a great level where we did DCA. We did take full advantage of this opportunity. Whether we got into these levels or these levels, regardless, we don't worry about catching bottoms. We worry about taking risk at the best times to gain the exposure, so to ultimately benefit from some upside. Guys, let's take a look at this in a little bit more detail. Really, what's bullish for me here, guys, is like when I look at this chart, is that we did come down with an impulsive move, and we're getting a nice slow grind to the upside. Many individuals might have called this, a retracement, and it's valid. It's not like it's a wrong thing to think when you see this type of price action. This looks like a very retracive type of price action, but then it disturbs it by saying, you know what, we're going to go for an impulse here, which we did get an impulse, a nice breakout, which is awesome, above the 200 daily, and we're in an uptrend all of a sudden, and then all of a sudden we're getting a bit of a pullback, back testing the breakout level, which was right around this area. I would say the majority of the breakout interest, volume backed, it was right here at this point, about $1 psychological level, nice round number, based on horizontal levels and dips of the past and price action of the past. You can see how this level was a very psychological level. Now, we could still be bullish on base, from a fundamental perspective, but from a price action perspective, there's still upside. I'm not saying not, but the reality is that from a performance perspective, you're not buying a discount, guys. We gotta respect the range. The range is very well defined, and it's very clear to me that we are in the mid range. The mid of the range is generally, doesn't have to be the best area, it doesn't have to be the worst, but it's a 50-50, right? You're buying 50% towards the top, which is the resistance, and 50% towards the bottom, which is the support. And because of that, it's a 50-50 shot. Now, your argument could be, yeah, we're going to break out, Mike. What are you talking about? Yeah, it's possible. But what I can tell you for sure, with 100-degree certainty, is that at $2.24, we got rejected twice. Okay, so that's for sure. Now, if you're going to respect the fact that TA is telling you that that was resistance in the past and that is an emotional level still, you would understand that it could be resistance again. And then you're ignoring other factors like volume, which is, very clear also using the volume profile. After these pumps and dumps, we can see that this level right here, should be a very emotional level, given that above there's not much volume, not much market participation. So what we really need is to get volume, and we need to build market participation, enough volume here to actually break out of these low volume levels. Without look, there's not even enough participants here to hold the price down. So it's only a few active players, active wallets, strong wallets, whales, market makers, manipulators, whatever you want to call them, ultimately that are controlling this price action up here. However, if we can pick up volume and numbers, the market could definitely, break right through. But there's going to be a point in time where these individuals took full advantage of their abilities to make, and come down and deploy and pack their bags. And why I'm thinking that is, look at all the volume here. Now, the majority of it, a lot of it, I'm not going to say the majority, but a good portion of it begins right into this. As you can see, look at these two levels, right? Look at these two bumps of volume. You can see that. And it's nice to see that at least for price actions moving to the upside, which is a good sign of, bullishness, accumulation, a good sign that demand is outperforming supply. Whether it be, manipulated or not, it's still here that there are more buyers than sellers, clearly. Now, could we get another instance of manipulation? Remember, this trendline liquidity could be a level of which that can be hunted. And because trendline liquidity is so ambiguous, because there's no clear level, because there's multiple levels here, right? Here, and ultimately down here. So there's many little levels of where liquidity is trapped on these bottoms. And the bigger question is that do the bears have an incentive to come down here and hunt that liquidity right into this area? Guys, I'll tell you this, why not? It could happen. It's very possible, right? So we have to understand that this could be maybe a little bit of a pump, Maybe we get a lower high, and then we come down to make a lower low, confirm change of direction, change of character, and come down and start hunting liquidity in this volume node right here. Are the bears going to have enough strength to break below this bottom? Obviously, we'll have to see the evidence. I'm hoping that this V recovery holds strength. And if we do come down for this hypothetical bearish case scenario where we do dip and hunt liquidity at these zones, and hoping that eventually we come down and form a nice, beautiful passive accumulation structure, fat rounded bottom. And that will give us an indication that not only is there accumulation happening, but when you see passive accumulation, usually it's limit order type of accumulation. It's longer term holding accumulation. And with a confirmation low, a higher low with a rounded bottom, you start looking at V recovery and rounded bottom, Adam and Eve right into this level. It starts to look much better. The risk that you're taking right now is that market makers come down and take full advantage of the opportunity to take and hunt this trendline liquidity. Now, I got to be honest, guys, it doesn't have to happen. That's the thing about charts. It doesn't have to happen. The bearish case scenario is that we could come down to this zone and hunt the liquidity in this area. Point of control is here, and that's what I would, be concerned about. But let's hold on a second, because here on the daily, from a bullish perspective now, you can see very clearly we're in an uptrend. Very clearly. We broke out very nicely with volume, which is very nice. The market conditions in general, based on Ethereum and based on Bitcoin, give us no indication to be completely bearish here. Yes, there's some indications. Yes, if you look, there are some things that, Bitcoin is printing, but, reacting on a bearish divergence on a high time frame, it can be invalidated very easily. And we've seen this happen very many, many times. So it's not really that, crucial and lucrative to react from a bearish perspective when you do not have market structure that suggests that you need to react. Where is the market structure here? Where is the market structure that shows us that we are no longer making higher highs and higher lows? Is this a lower low? No. Could this be an ABC correction? Sure, it can be. We got to be honest. This could be an ABC. Come down, back to the trend line. Like I said, there's still this huge node of volume in the point of control that could still respect not only the diagonal trend line, but the 200 daily EMA for support. And the emotions level right into this level can be respected. So what I'm trying to say here is, yes, it's still bullish. And even if we come down here, it's still bullish because we're still above these highs and we still made a higher high and higher lows. And we could still do one of these and continue. So what I'm trying to say here is that there's no reason to be completely bearish, but there could be a reason to prepare for an opportunity to buy the dip. And that's much better, obviously, to be offensive by accumulation during moments like these, because these are the moments that we could go parabolic, given that many signals are given at the current moment that we are entering an alt season. So based on that fact, exiting or shorting is very risky. And accumulating and DCAing at liquidity zones, at support levels, is your best option here. Obviously not financial advice, but if you have the conviction of an alt season and a bull run, that would be a focus of mine. So again, coming back to trend line and maybe getting some support based on the horizontal confluence of the trend line and of the 200 daily and the point of control suggests that if we do come here, I better have some capital to buy the dip. If we do come down, guys, I wouldn't be buying anything until I see some structure suggesting a reversal. That's what I would be doing. So let's make this a little bit more clear. I'm going to get this, and I'm going to actually... Can we reuse this horizontal? Yeah, let's reuse this yellow line right here. Why not? Let's bring it down here because that's a little bit more clean and more relevant. As you can see, there's an imbalance here that I'm worried about. But if we do come down there, you can see the inflection, right? The inflection is literally all that confluence that you're getting because either we bounce off of it or we break below it and things start to look ugly, right? We don't want to get into ugly situations here. So I'm interested as a point of interest to see what happens at this zone, at this level, because if we can get a market structure shift here, I'm interested. And obviously, I want to keep in mind that we can seep a little bit lower and hunt some of this and cause pain into this volume, into those market participants at that level. So I just want to be very clear that, coming down here doesn't mean it's exactly at, $1.95. I want to see something, some sort of structure, reversal structure, and then we can get going. Then again, let's be more bullish. Why not? Look at this structure, guys. It does look retracive. It does look like it might retrace. But we can zoom in here a second and potentially keep an eye on what's really happening here. Let's go into the 4 hour. Actually, you know what? Before we get into the 4 hour, let's take a look at oscillators. We're getting a bullish response right now on momentum, on volatility, actually, specifically. If we can get overbought and make a bullish move, great, but we better make a higher high or else it's not looking good. And I'm saying this because every time we got overbought, okay, pretty much in the last little while, including here, we've went, look at the highs. They're higher highs. If we go for this bullish response, and mind you, the majority of the move is when we break above 70, which we're doing right now. Okay, so that's usually where we get the most parabolic moves. Look at this thing. As soon as it peaked below 70, look at the nice volume we got, the nice move that we got. So be patient with it. But we need to make a higher high, because if we do not on this bullish response, it's a confirmation high of a lower high, of a potential change of direction, change of character here. And then for sure, if we break below this low, guys, we're coming down and things start to look really bad. Okay, so we got to understand that. We don't want signs of an exit pump of sorts, because it means that literally the bulls are exiting their positions and anticipating much lower levels. Okay, from a psychological perspective, you need to prepare. So I want to keep an eye on what's going on here on the daily from this bullish perspective, because the bulls are not done responding. So far it's pretty weak, I'll be honest. But like I said, the majority of the move comes in towards the tail end as it gets overbought. We didn't get an EMA cross. We're slowly dipping into the bearish control zone. We've done it before, and we got a nice little pop. Do we go for another, guys? And the expansions are looking okay. The bullish expansions are bigger, a lot bigger than the bearish, so it's all right. Guys, you can see the story being built here, right? Very, very clear story. So let's see what's going on with some of these. Let's clean this up a little bit. And then let's go on lower time frames. Let's see what's happening on the 4 hour. Now, if you are looking at this structure, it's definitely a tradable structure. I understand that completely. It does look like it wants to go bullish. Just understand this is still a bearish scenario. Given that we coming down from an impulsive move, it's likely that this turns into a bear flag where it's an exchange of hands and we continue to the downside. Okay, that's the bearish case scenario, just to put it back, and that's the trend line liquidity, the trend line scenario, that with the horizontal and the confluence of the 200 that we talked about on the daily. Now, what about the structure itself? Could we get a reversal here? And let's see what the structure is telling us. Could we get a reversal? Let's zoom in a little bit more. Let's take a look at oscillators. You can see that we did get a swing failure a little bit down here, right? We did swing, came back above, back test and sprung. We didn't break out, make any higher highs. I'm starting to see these bottoms get a little rounded, which is nice, right? We don't want complete V recoveries. They're great. We want a recovery, no doubt. But I really like backing and getting behind the idea of passive accumulation. Generally speaking, that's usually a much better indication of strength. Okay, longer term, more sustainable strength. V recoveries are usually perpetual trade induced price action, and equivalent to that, the volatility that we get from wicks and all of that. Okay, so what I really want to see is obviously a break of these tops, and I'm going to try to correlate it very properly to the volume profile. Guys, if we break above here, great. It's a breakout. It is potentially a reversal. And if you look at the oscillators, we are upwards trending, looking for overbought conditions. I don't see any signs of major bearish divergence other than what happened right here. Okay, as that was happening, we do see this scenario where we were making higher lows, and the expansion did the same thing. Okay, so what tells me is that we got a little bit of Class A bullish divergence, a nice little one on two touches. One may argue maybe even third, but it's okay. Let's just be like that, because that's, almost like a Class C into this level. But we are definitely get a bit of follow through and momentum, and price action is looking for a bit of follow through. So if we get overbought here, this is likely to have broken out. So getting into a shorter term trade and putting stop losses underneath this wick, we just understand that this wick is hectic. Well, because that's a tweezer bottom, and it could definitely act as a point of interest to come back down there. What we just have to understand is that, if we do reverse here, it could be a great reversal for a continuation of the trend to the upside. And it could be led by Ethereum and Bitcoin and the bullishness that we know that we have here in this space at the current moment. And it is what it is. The trend is your friend, guys. So we don't want to always be looking for the best price, because we might miss out on the current price, which could be a decent one. And that is exactly what's happening with AERODROME at the moment. Sometimes charts are just that vague, and you have to accept that DCing and gaining exposure slow and steadily is probably the safest thing to do. Now, just back to the daily from the bullish perspective, and this scenario, if we get a swing failure where we get back in, pump up, get back in, type of thing, guys, that's super bearish. Get out. It's going to be accumulation, manipulation, and then distribution. And it's likely that we come back down to this level, $1 to about 90-cent zone, to see what happens, to give it a bit of wiggle room down here to see what happens. All right, guys, so we're doing pretty good. I'm not trying to be bearish. I'm trying to be very neutral and level-headed and still remain bullish until proven otherwise, guys, because that's the way the market works. And at the current moment, AERODROME is still looking good. What can I say? Guys, if I've offered you any value in this video, do the channel a massive favor. Slap the like button. It does really help out with the algorithm. If I followed you, if you want to follow me on the socials, the links are in the description. Better yet, guys, join the Discord. The Discord is where it's at. Lots of good alpha, trade setups, fundamentals, and learning material. The best part is it's absolutely free. Take care, guys. Have a good one. And don't forget, buy the dip.